Hey guys, it's Carter, and today we're going to be looking at one of the most important, probably the most important, if not the most critical charts associated with the equity cycle right now. What is next for our bull cycle? The S&P is now seeing about a 4% drop from the highs, and I'm anticipating a little bit more downside. If you've seen my Halloween special, you know that. But I'm going to show you one of the charts that I'm watching very closely that determines a lot about what happens to equities in the next 6 to 8 months to come. Because as you know, I believe we're seeing right now a temporary pullback to the averages on the S&P 500 that will lead towards higher. I'm going to show you what this chart, the DXY, has to say about that as well. We're also going to look at the Canadian dollar as well, very quickly, just for fun, and the USD C80 pair. So join me in this video. It should be quite interesting and have some major implications that you're not going to want to miss. All right, so this is the chart of the DXY at 99.55. This is the US dollar index. So it's the US dollar compared to a basket of major currencies around the world. And we're tracking a high confidence ABC move to the downside that began in 2022. So this is huge. This has huge implications because a falling dollar is typically very bullish for US equities. So stocks typically rise, crypto typically rises as well. So a drop in the US dollar would be incredibly bullish for equities and mean likely the continuation of this bull cycle. It would mean that what we're seeing on the S&P 500 right now and possibly in the weeks to come would likelier just be a pullback to the averages rather than the start of a bear market if we see this chart drop significantly. And right now, the high confidence pattern that I am tracking is a drop in the next 6 to 8 months on the DXY. And that is because we have now seen our C wave take us below this major box of support, and it's fighting it right now as resistance. And we've since moved up in a three-wave corrective pattern right here. So this is a three-wave corrective pattern below major resistance. So provided we aren't getting above 100 and 101.5, and then possibly there's even a little bit of a minor level at 102.5, not on this chart, provided we aren't getting back above this major resistance now at around 101.5 and 102.5, then it's likely we are going to take out this low made right here in June at around 96 on the DXY and head much lower in the continuation of our C wave to the downside, because I believe this major A, B, C move is not finished. And a major part of the reason why I don't believe this C wave to the downside is finished is because we're now below major resistance in a corrective structure to the upside into major resistance once again via Fibonacci. So major structural and Fibonacci resistance is above our heads, and it's likely going to drop us into this structural and Fibonacci support below 93 and possibly even into the upper 80s as well. So around 93 is one of my levels to the downside right here for this C wave to bottom. And if we keep falling through 93, we could see the just sub 90 level tested as well. There's good Fibonacci support and structural support there as well before we see the US dollar head higher. So if the US dollar, the DXY, sees a massive drawdown in the next 6 months, which I am anticipating, by the way, that would be potentially very bullish for stocks and crypto. So what is the Canadian dollar saying right now? So very quickly here's the Canadian dollar, and there's a lot to like about this chart right now. So this is the CXY, the Canadian dollar index at 71.19 right now. And you can see that we've potentially seen a 5-wave advance right here and a very bullish retracement into these key Fibonacci support areas. So between 70 and 71 is where I'd look for a major reversal higher on the CXY, which is the Canadian dollar index. This is the Canadian dollar compared to a basket of currencies around the world, the major currencies around the world. And we've seen a healthy corrective looking decline from the 5-wave move we've seen. And I'm anticipating a major bounce in the 70 to 71 area that will possibly take us towards this 77.5 area of resistance up here, or even the 80 level in the next 6 to 8 months to come. And we have now seen a lower low in price. So to make it more clear, a lower low in price right here This area right here is lower than it was a couple weeks ago, and we've seen now positive divergence on the RSI and an oversold signal right here. So this is quite positive for the Canadian dollar index, and one of the many reasons why I think this is likely going to rise much higher than this high right here in June at 74 or just below 74, and could definitely take us towards 78 to 80 in the months to come. If we zoom out, you can definitely see there's potential challenges at the 78 level. Could add some structural resistance right there. Definite major challenges up there. But yeah, if we can start to form what looks like an upside impulse, I definitely see the Canadian dollar rising in the next 6 to 8 months. So finally, this is the USD Canadian dollar pair. I just wanted to compare what's going to happen because we think the US dollar index is going to decrease in the next 6 to 8 months and the Canadian dollar index to rise in the next 6 to 8 months. This means that this pair is very likely going to fall because you can see that we've made a bull flag here on the weekly chart since 2016. We're at the top of it once again. And at the top of it, we did something pretty scary. Since we got to the top, the major resistance level up here, we've fallen in 5 waves, which means the downside is likely not done. We've seen an impulsive decline from the top of this major resistance, followed by a corrective move up into this resistance. And this major resistance here is at 141.5. There's a level right here. And then 143.5 would be the next level if we can get above 141.5. But regardless, as long as we're not above 143.5, the odds are much higher. We're going to take out this low made in June at around 136. We're going to be probably taking this out in the months to come and head to at least 130 to the downside. 130.7 is the minimum target I have for the downside. That's where I believe the USD Canadian pair is going to be at sometime in the next 3 to 6 to 8 months potentially. I see much more downside to come now that we've seen an impulsive decline from resistance followed by a corrective move to the upside. And that's provided we don't get above 143.5. We're likely going to see 130.7 in the months to come. So yeah, a dropping US dollar could be very, very bullish for equity. So very bullish for stocks, very bullish for crypto potentially. It could be a very bullish period within the next 6 months after this temporary correction that we're seeing in the S&P 500 right now, which I believe that's all we're seeing, a temporary pullback to the averages because we're so overstretched right now before we head much higher in the 6 to 8 months to come. So yeah, those are the moves I'm looking at for the US dollar, the Canadian dollar, for stocks, crypto, you name it, in the next 3 to 6 to 8 months. Let's see what plays out.